Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, November 29th. Hey, we got a couple economic news releases to go over today. We'll start with the GDP Q3. This is a second revision. So we had our initial revision last month in October at 3%. Forecast for Q3 was 3.2 for this month and came in at a whopping 3.3%. So the final revision will come out next month in December. But so far, Q3 is looking great, and of course, Q4 is probably not looking so bad either. So it's really kind of showing that our economy is picking up as we gain steam ahead. Good news there. Also, good news, we got pending home sales for the month of October. So September it pulled back 0.4%, but October was supposed to go up 1%, and it jumped up 3.5%. So good numbers right there, still showing a strong demand for homes. Just again, the basic line is there's more demand than there is supply, and that's what's kind of driving up home prices, continued home prices. And if you look at it, mortgages, the way they're built today, you still have to show the ability to repay. And so we don't have like the liar's loans and everything like that now. And these are probably the best loans we've had in some time. So default rates, unless you have a lot of unemployment, probably won't be much of a factor going forward, or at least in the near future here. Also, we got the Janet Yellen testimony. She did speak. This is probably her last engagement with the Congress before she leaves, the chair in February. She had made some comments basically saying that, well, things nothing out of the ordinary. Basically saying that the economy is improving, that jobs are improving. She thinks with time, with the jobs and increases of wages will go up, which will help bring up inflation. And she kind of went backwards a little bit. She earlier in November she did state something about transitory may not be there may not be a transitory. Now she's bringing the phrase transitory with inflation again. And to be frank, this has been going on for a good 10 years. And so you have to kind of ask, or at least wonder, is there really such a thing as transitory with inflation today? Uh, because transitory by definition is something temporary, and this has been something going on for a decade. So, anyways, it's little too long of a period for it to be really considered again transitory in my opinion. Fed Beige Book, that'll be coming out about 11 o'clock Pacific Standard Time this morning. That could bring up some good information, but don't expect any surprises. This will kind of give us the Fed's releases of different parts of the U.S. going to give them a gauge as to where the economy is moving towards, and give us a little bit more insight. Right now, stock market is mixed. They were up a bit more, but the Dow is continuing going into a positive territory, more record territory. The Nasdaq and S&P is taking a little bit of a break, and it's looking more like with the news that we got, it's more due to profit taking. So, yesterday we had kind of up and down day here. The stocks were up for the most part, and then it kind of pulled back a little bit because the missile went off in North Korea, and then we got news that the tax bill passed, moved forward in Senate, so we should probably get a maybe tomorrow more of a final revision from Senate, so we'll get a better idea what the tax bill might look like, and looks like it could be passed through end of the year. So I think that kind of offset the news of the missile and kind of help build up the stock market again today, which was not good news for the bond market, which we'll see here in a minute what that looked like. But stock market did pretty good, and again, the S&P and the Nasdaq. It's not that they're doing bad; it's just more or less people, cashing in a bit, taking profit taking. Bond market. Here's what we said: we were way up here. We were touching the 50-day moving average. We were above the 200-day moving average, which has been a hard sell. Been hard for us to overtake for quite some time, and now we got bumped way below it. Now we're pushing the 25-day moving average. We were down a lot further. Right now we're about 17 basis points, down about 17 basis points, which translates, yes, worse pricing. And again, the problem is now we're back below the 200-day moving average, and it may be difficult for us to get back above it again. And again, we're also below the 25-day moving average, which could push us down to this number here. So again, this gives us a bit more room. And of course, that money is looking, oh, excuse me, here's the 10-year Treasury. The opposite is true. So we were hoping the Treasury would get below this 200-day moving average, and instead it went back above the 50-day moving average and above the 25-day up against this Fibonacci number, and it's pulled back since. So this went up 4 basis points, whereas again right now the mortgage-backed securities is down 17 basis points, which yeah gives us worse pricing today than what we saw yesterday. And again, the money kind of went more into treasuries as a result. So that pretty much wraps things up. I hope you guys have a great rest of your day. But if you guys want to get more data, just go over to Twitter. You can find me on my handle at Mike Bjork on Twitter and get more updates throughout the day. You guys enjoy the rest of the day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye.